Hey everyone, Jim Fitzpatrick. Thanks so much for joining us this morning. Captives accounted for the largest new vehicle market share in the first quarter, according to Experian. Joining me now to share more details on the state of the automotive finance market report for the first quarter is Melinda Zabritski, who is Experian's head of automotive financial insights. Thank you so much for joining us once again, Melinda.
Great, thank you. Happy to be here.
Yeah, so the report highlighted the rebound of new vehicle inventory, and how has this affected the lender market share?
Well, like you mentioned, captives just soared to the #1 position for new. We saw a lot of incentives that really started last quarter, but first quarter they just dominated with over 60% share for new,
Wow.
and that's the highest we've seen it in about 10 years.
And why is that, do you think?
Well, with the rates being what they are, the lower rates coming in with the incentives that they had
Yeah.
just really were very appealing to consumers, and consumers took advantage of it.
Yeah, that's fantastic. So how did new vehicle inventory impact the leasing in this last quarter?
Yeah, so with inventory being nicely balanced, we're starting to see more leasing.
Hmm.
When it was very tight, leasing had dropped down to
Yeah,
around 17, 18%.
yeah.
And now it's back to around 24%, which is typically what we would see at about 15 years ago or so.
Hmm. Hmm. And are you continuing to see loan amounts stabilize?
We are. That was a great thing that we saw in the first quarter, and we started to see it towards the end of last year. We're no longer seeing the loan amounts just jump dramatically year over year.
Yeah.
For new vehicles, it's been hovering right around $40,000. It's a little lower this quarter than it was last year,
Okay.
and even used loan amounts are also stabilizing and have actually come down from last year as well.
No, that's good. And how is this influencing average monthly payments? I know they're north of 700 now on new cars, right?
Yeah, they certainly are. The monthly payments for new have been really hovering around 732, 735 for the
Wow.
last couple quarters. It was 735 this quarter. Despite some of the loan amounts coming down a little, some of those high interest rates are keeping the payments, in that $700 range.
Yeah.
And interestingly enough, the terms are also coming down a little bit,
Hmm.
especially the incentives that we saw were shorter terms. And across all loans, we're seeing consumers opt to take slightly shorter terms. And I think that's really
Hmm.
the result of the rates being what they are, of consumers
Sure.
just looking to pay the least amount of interest possible.
Yeah, for sure. What about delinquencies? Are we seeing? We hear a lot about obviously inflation, gas prices, a lot of things that are hurting the average American out there, the average American household. Are we seeing delinquencies on the rise?
Unfortunately, we are.
Yeah.
The 60-day delinquency rate has steadily increased. It's a little over 1% of all balances. It's of course lower than Q4. Q1 is usually lower than the end of last year,
Mm,
but it's one of the higher rates of delinquency we've seen in quite a few years.
interesting. I'm sure lenders are taking a close look at that, right? So
Certainly.
were there any other findings in the report that stood out to you?
Well, the nice thing, like I said, is things really seem to be stabilizing. We're not seeing the really big growth in payments and loan amounts. Unfortunately, yes, that delinquency figure was higher than it's been in many years. But the nice thing is the market is doing well. Consumers are out buying cars, and lenders are financing.
Yeah, that's fantastic. It's all good news for a strong summer of selling, this year, right?
Definitely.
Yeah, for sure. Melinda Zabritski, Experience Head of Automotive Financial Insights. Thank you so much for joining us for this update. We very much appreciate it. And till next time, stay well. Have a great summer.
Great. Thank you.
All right. Thank you.